Hello there, my name is Enoch. Taking care of your health should be a top priority. Looking at the various engagements that we have today, it is so easy to forget about our health, mental well-being. That is why we introduce to you the Healthier Talk Show, a brand new show that is going to address matters concerning your health, nutrition, stress management, mental health, name it. We bring to you a wide range of experts who are going to be touching pertinent issues concerning our health. Tune in every Tuesday at 10 a.m. live on Faith Today TV.
Mountain Moving Faith. This is my latest book. And if you want to learn how you can move mountains, life has many mountains. While this journey, you will encounter mountains and you wonder, how can I move mountains? This is a book to read. And it took me time to research, to pray, and to wait on God and look at the scriptures and what Jesus talked about moving mountains. And this book is quite a story, it's quite an inspiration. It is quite something that will change your life. So order your copy today. We can send it to you wherever you are in this country. We will be able to send this book to you on Mountain Moving Faith. Call that number or send a message and our team will be able to ship it to you wherever you are. There's a book to read. You can also buy for your friend, for a family as a gift. And I have no doubt they will thank you and they will be always thankful for what you have done for them. So God bless you as you read this book, Mountain Moving Faith.
Welcome to Kingdom Business Network. We are so much excited to be presenting this program today. And I want to tell you cannot miss what we are going to discuss today. We want to take your investing game offshore. That means global. Remember, it's very, very important for us to diversify our portfolio. If you're investing in Kenyan stocks or you have other investment opportunities in this country, the key is to actually have a number of various options that you can be able to diversify in. We don't want you to put your eggs in one basket. And we are here today to actually help you on how can you invest outside the country. And today we are going to discuss about investing beyond borders. And we're going to guide you on offshore stocks and exchange traded funds. And to help us unpack that is a friend of ours known as Leah Kengaro. And I made it right. Leah, you can greet the viewer and also introduce yourself. And you can also tell us a bit on what you do.
Okay. So I'm Leah Kengaro. I am a financial market enthusiast and an expert. So as Francis mentioned, today we are going to basically explore the offshore space, the offshore markets and the ETFs. So personally, I've been in the space for 8 years. I work with a company called Scope Markets. I am a prime account manager in the company. So we're really going to dig deep into this space, and I hope you're going to learn something from it.
Welcome very much.
Thank you.
And on my immediate left is my co-host, Victoriana. You can introduce yourself and also tell us something about what we are going to discuss today.
Thank you so much, Dr. Mungai, and Leah, welcome. We are so glad to have you on the show today, and looking forward to the insights that you have to share with us. To our viewers, welcome once again to the Kingdom Business Network. Remember to like, to share, to subscribe. Remember to tag your friends so that we all get to partake from this important discussion today. So like Dr. Mungai has said, today we are taking you global. You know, before we've been looking at investing in stocks, and now we are going to dig deeper. We are going into the offshore space. We're going to be looking at offshore stocks and exchange traded funds. And I know that you're going to get key takeaways, which will help you to make your money work for you. Thank you.
The beauty of our discussion today is that these terms might look very big terms, but Leah is here. He'll give you actually practically what you can actually do to get into this space. She works with an organization, Scope Market, which actually will give you the platform and will give you the tools and will help you and guide you on how to do it. All you need to do is, if you like what we're discussing today, offshore markets, exchange traded funds, she will help you. All you need is just commit yourself and that's it. So, Leah, what is so special about Scope Markets?
So, Scope Markets, it's actually a very unique broker here in Kenya. So, first of all, it's licensed by the capital market authorities. And by unique, I mean it's the only broker that is able to give you accessibility to physical offshore stocks that you're able to access globally. So that is one of the unique points about it. Easy to access the company in terms of account opening. So it's just a very simple procedure where you open an account, verification is done. You have to do like a KYC procedure, and then we actually give you the platform that gives you the access to these stocks.
Okay.
Yes.
So somebody can easily access the stocks.
Very easily.
I just wanted to get that out of the table because I don't want people to switch off and say, oh, offshore stocks looks very, very far from us and complex.
Yes.
It is not complex. It's very, very simple. It's something you can do. And with that, can you tell us what is offshore stocks and what are ETFs?
So the whole space on offshore stocks, just to really simplify it, offshore stocks just means you're investing in assets that are not based in your country or in your jurisdiction. So it's just as long as you're not investing in anything. So in this case, because you're in Kenya, as long as you're not investing in anything that is Kenyan based, you're actually investing in an offshore market. So in this particular instance, you're going to focus on the stocks. And we're introducing, maybe some of you know it, but a new terminology called ETFs. So ideally, we're going to break it down. Or should I just go ahead and do it? Okay.
Just break it down.
Okay, so for single stocks, I think everyone or almost everyone knows what stocks are. This is when you buy into a certain company and become a shareholder. So when it gets to the ETF point, so ETFs is more like a basket of these stocks. So maybe just to use practical examples, I'm sure most of us know companies like Google, Amazon, Tesla, Meta. So when you buy an ETF, it's just like a basket that, for example, has all these stocks together. So ETFs can be stock-based, can be bond-based, so it can be a group of bonds, can be a group of commodities, but it's just a basket of these things. So just helping you to diversify your portfolio. Yeah.
So why should an investor consider buying ETFs and offshore stocks?
So first of all, maybe bringing it closer home, most investors, like you mentioned, are used to our local markets. So when you get out there, first of all, there's an element of diversification because now you're getting access to different economies. So you see, these are maybe say US markets. This is a whole different space. So it's a different economy, different companies, different industries. So the idea is a lot of diversification in that space. And the fact that this market is very volatile, you can't compare it again with maybe our local markets. So it's easy for you to access opportunities and basically get a very good return from the same. Yeah.
Does foreign exchange come in terms of hedge? I don't know that call it hedging of in a foreign currency as opposed to the Kenyan shilling.
So yes, so actually there's the word that you've mentioned, hedging. One of the advantages of venturing into the offshore markets can help you hedge against our local markets, especially when you're having very huge drawdowns in the country. So the element of foreign exchange comes in, especially, again, I'll just use practical examples to make this easy. So you remember the instance where our Kenyan shilling against the dollar had gone all the way to around 160. So in such instances, if you invest in a foreign currency, you're able to actually benefit when their currency is maybe gaining against ours. So you can actually take advantage of that foreign exchange space.
Because you are actually investing in foreign
currencies, exactly.
So you buy the dollars through your...
Exactly,
yeah?
Yes.
And then your portfolio is in a foreign
Yes,
currency.
in a foreign currency. And it's automated, so you don't even have to do much on your side. If you're funding via M-Pesa, the system is able to automate. If you want to convert it to dollars to buy US stocks, the system automatically does that for you. Yeah.
So which markets are available and which are the key ones that you offer?
So the key markets, I think we're going to focus on three majors because they're actually the three major markets globally. So this is the US markets, the UK markets, and the EU markets. So the US, which is like one of the biggest economies in the world, it's actually known for tech companies. So it's actually a tech giant in this particular space. So even when you look at the nitty-gritties of the companies, you'll realize most companies might actually be US based, and especially the tech, which is currently like the bubble we are in globally. And then there's the UK markets. UK is known for the financial stability. I'm sure over time, if you check the pound, it's quite stable. And then the Euro markets, they're actually known for a lot of manufacturing, a lot of luxury products. So it's a diverse mixture of the three, but those are the three main areas that we're going to look at.
Okay.
Yeah.
Okay, Victoriana, what is your take about this?
Thank you so much, Dr. Mungai. Leah, I think you've explained that beautifully. I think now I'm better placed to even go further than stocks locally. So you've explained to us what offshore stocks are, you've explained ETFs, and you've told us about the three major markets. So now for someone who is interested, how do you get into this space of the offshore stocks and the ETFs? How do you start and where do you start?
Okay, so assuming right now you came to me and you said I actually want to start buying these stocks. So the first step for us as Kenyans, when you're getting into this space, you have to access the markets through a brokerage firm. So that's where a company like Scope Markets comes in. So when you come to Scope Markets, or let's say you've come and we just have to open an account. So account opening is a process that takes about 10 or so minutes. So you open an account. So depending on also the kind of stocks you're interested in, say for example, you'll use US stocks as an example. There's a document you need to sign. It's a document from the US government, since we are foreigners investing in their companies. So it's just like a one-pager document you sign, also just to make sure it's more like and some terms and conditions. And then we give you the platform that gives you access to the stocks. So after you get the platform, on the platform there's everything listed there. So it's as easy as if you've settled on buying an Apple share, you just come to the platform and it's just a very easy to use kind of system. So it's just a matter of just execution. So you buy whatever assets you're interested in. Yeah.
All right.
So when you look at these markets, what are the main stock exchanges that are available and what role do they play?
Okay, so in terms of the exchanges, we'll still focus on the three jurisdictions that we've mentioned. So for example, in the United States, there are two major exchanges, the New York Stock Exchange and the Nasdaq Stock Exchange. Then when it comes to the United Kingdom, the UK, there's the London Stock Exchange. And for the Euro region, there's the Euronext. So the Euro region actually encompasses different countries. So they're all listed under the Euronext. So in terms for the stock exchange, what they help in, or the role that they play, they, first of all, when companies want to be traded publicly, they have to go through the exchanges. So they help in listing of the companies, they help in transparency, they help in creating liquidity in the markets. So they are the main, it's like the main center for the companies to go, so that now we as investors are able to access them. Yes.
Maybe there's a viewer there asking, what are the popular US stocks. Let's focus now on US.
Okay.
US stocks, and what are the popular global ETFs that are there, and why should investors choose them? I know I've had terms of Magnificent Seven. What are those? Because I want people to start to relate the way they relate with the Nairobi Stock Exchange here in Kenya, and they know companies like Safaricom, etc., etc.
Yes.
When you go global, the US market, what companies are we saying they can invest in, and why those companies? And I know there are hundreds of them, if not thousands.
Yes.
But might be, as an investment advisor, you can whet our appetite and give us some magic. Some of these stocks I've done. I know I'm in that space personally, and I know some of the stocks have gotten me some money.
Oh, nice.
Like Tesla, for example. Allow me to just mention that.
Yes.
There's a time you advised me to buy Tesla. I think it was how many dollars was it? 100 and 120.
Yes, when they did the split.
Yesterday when I checked, one stock was, I think, $360.
Yes.
You can imagine 150. Now it's 350. More than double. That's $200. If you multiply by 130, that is 200 and something.
Yes.
How much is that? 200 times 130. Okay, you can do the maths. The mathematicians.
Yes.
So you know what we are talking about. So to whet our appetite, give us some of those stocks, the key ones, the ones which have done some things which are interesting. Just to mention, not to say that all will do the same, but just to give people some idea of what we're talking about.
So I actually like what you've said, the Mag 7. So we have the Mag 7 are like the biggest companies actually globally. They're also referred to as blue chip stocks. So these actually examples are Tesla, there's Microsoft, there's Meta, Amazon, Google. So it's literally the companies we all know, the big companies globally. And they're big. First of all, you'll realize if it's a company like Google, I think every person or every user who has a smartphone has Google on their phone. So you find that through that method, the fact that this company is known globally and has a lot of users, that is actually how they end up making money. For example, you'll realize companies like Meta really thrive in advertisements. So if you have, maybe even for certain posts like the show today, you might have the Meta as a platform where people can be able to access.
Meta is Facebook,
Facebook actually. So so these big companies, first of all, in terms of the US markets, these are usually like the biggest growth stocks. Because if you look at how they've performed, like you've mentioned, the growth of Tesla, and if you look at the 2024 data, companies that we all know, Netflix, there's a company called Palantir. I know that's not a very common company, but if you look at it, it's one of the companies that performed the best last year.
I think they're in defense
yes, and then they mix it up with AI. So they actually had a growth of over 300% within a year. So the growth can be very diverse, all the way from 30% to over 100, just dependent on the company. So in terms of the stocks, the mega caps are usually like some of the most interesting stocks, but we also have some emerging stocks, and I'd also say some small caps that do quite well. So you see the likes of Palantir, it's not part of the mega, but it's one of the biggest or the most talked about stocks at the moment. Companies like Nvidia is actually one of the other companies that really performed well from last year, actually since 2020, since the time we had COVID. And then when it comes to the ETFs, we have, I'll only talk about 3, those are like the major ones. So again, the way I said, ETFs being a basket. So we have an ETF called QQQ, which is the Nasdaq ETF. Just to summarize it, it's usually, it encompasses the top 100 tech companies in the United States. Then we have the SSP, it's called SPDR as an ETF, but it's the S&P 500 ETF. Again, these are like the 500 large cap companies. And this one, so for the QQQ, it's tech. SP 500, it mixes different industries. So you see, when you're buying that, you're buying into 500 companies in different sectors. And then we have another one called the VTI, the Vanguard Total World Stock. So this also mixes different sectors, but it also mixes them. It doesn't focus on like large caps. It mixes large caps, mid caps, and small caps. So it just mixes all the companies. So with ETFs, again, that's why we were talking about more diversification. Yeah.
Let's get to the ETF, because you're talking of a basket, and you're talking about many shares or stocks in that basket.
Yes.
how much money do you need to invest? Because are you buying the whole basket or a fraction of the basket? Might be explained to the viewer, what is that?
That's a good question. So you'll realize when you're buying single stocks, just as an example, you'll find a company A costing around, say, $100. Company B will cost around $300. So you see, like the way you're saying for the NASDAQ ETF, 100 tech companies, they all have different costs. But how as an ETF is structured, and we'll use, say, maybe the mega companies, because they are ranked. So like number one is usually the biggest company globally, and it carries the most weight. So for example, let's say Apple. Apple is actually the largest at the moment. So Apple being number one, it will carry, say, 9%. So they weight them, so it doesn't come with the actual price. So they do some weighting. So you find like for a cumulative ETF, like say QQQ, which is the NASDAQ, can cost you around, say, $500 to $600, depending on the actual price of the markets. So it's structured. So if you check it in the markets, it's around $590 thereabout, 500 and something. Yes. So it's not like it takes all the costs, like all the exact costs of the single stocks. There's a way they weight them. Yes.
Let's get into something more practical. I've gotten into this, the platform. I know you have a platform.
Yes.
Maybe you can talk about that. And what's the ease of buying these shares once I've registered in the platform, and what's the ease of selling them, both in the offshore stocks and also the ETFs.
Okay.
The ease of buying and the ease of selling. Yeah.
So the platform we actually use from Scoop Markets is called a MetaTrader 5 platform. So on the MetaTrader 5, we'll again just maybe use the US stocks for this particular example. So you see here in Kenya, for example, you have the Nairobi Stock Exchange, and it has its opening hours and closing hours, like the opening bell and when the markets close. I think it's between 9 to 4 p.m.
Yeah.
So it's the same case with the United States. So like right now it's their time, it's actually at night. So the markets are closed. So you have to wait for their day to start, maybe say at around 8 for their markets to open. So in this case,
which is Kenya, 5:30.
Yes, so right now it's 5:30 due to the daylight savings.
Yeah.
After March, it's going to go back to 4:30
4:30,
when
yes.
their winter is over. So you have to wait for specifically 4:30 to engage in these stock markets. So the moment the markets are open, you getting into a position of buying a stock is as easy as a click of a button, because with the platform itself, the stocks are actually listed there. So it's just a matter of selecting, say, Amazon. You decide I want to buy 5, you just indicate the number of shares, and then you just say buy. So it's as easy as clicking the button. So the moment you execute, it's instant execution again. These markets are very liquid. They don't do the T plus, maybe 3 kind of systems, because the liquidity is enough. So immediately you buy, there's an instant execution. As long as the markets are open, when you want to liquidate, the moment you liquidate, you immediately get back your money.
Okay.
Yeah.
And I think it's good to mention to the viewer that once you get in, you actually get access to the platform.
Yes.
You can download it on your computer.
Yes.
You can put it on your phone.
Yes.
And you can actually buy and sell from your phone instantaneously.
In real time, actually, yes, from your phone.
Now, it's easy to buy and to sell. But there's somebody there who is saying, yes, you talked about Magnificent Seven, you talked about Tesla, etc. I know there are times some of these stocks might be very high priced, and you know the game is you buy low, sell high.
Yes.
How does somebody decide when to buy, when to get in, and when to sell? Because yes, it's easy to get in, but when should I get in? Is there an information base?
That's a very good question, actually, because I feel like one of the biggest challenge for any investor is knowing when to buy. Because sometimes you buy when it's too high and then it goes low and you're left up there.
Yeah.
So sometimes when you're coming into this space, there's a method called dollar cost averaging, and it's a very good method. What it means in very simple terms is you can consistently choose to buy a certain stock rather than buying it at a go. Because you'll realize, even as you're talking about some companies that did well last year, they had some months when they had a bit of a drawdown, and then there are months they went high. But ideally, first of all, assuming you also still want to buy them at once, so it's always good to buy these stocks when they've done some correction. So if you look at the markets, the transition between 2024 to 2025, the markets actually did a correction. And it's usually the best time to actually get into the markets can be the first quarter of the year, because you'll realize after a very good run, they will do a bit of a correction and then they'll pick up on the trend. So mostly the first quarter of the year, because most of the markets are even giving their annual reports, not markets, companies. They're giving the annual reports. So a lot of investors are also keen to see what performed well and jump into that. So there's usually a lot of demand during this period actually as we're speaking. So this is one of the best times. But ideally, again, even when you're looking at some of the stocks, you'll be able to see how they're performing. So as long as you get them at a point where they've done the drawdown, that's one of the best times to buy. And again, if you use that dollar cost averaging method, say you decide I'll be buying, say, Amazon month on month. So there are times you'll get it at price this, there are times you'll get it at this price. So it also helps you take advantage of the prices when they go down. Yeah.
As we continue with this discussion, the viewer, I would just want to encourage you to send your questions. I know that some of you have some questions that you'd want to ask Leah. And after the break, we will answer all the questions that you have. We want you to diversify, and that is the way to go. Now, before we take a break, we have a few minutes before the break.
Okay.
One of the things I want to say is, having used the platform, there are two things which have helped me in addition to what you've said. When I look at the platform, it's able to give me a graph, the ups and down, and it can go way back to many years. So if you take a stock like Coca-Cola, or Tesla or Amazon or whichever, the graph will show you it's going up, going down, because it's always going up and down.
Yes.
And then you're able to actually see, is it at a peak? Is it at a low?
Yes.
So that's one of the things I look at. The other thing I look at is that there is also the information that is available, which actually guides you in terms of how each one of these companies is performing.
Yes.
Maybe you can talk about that.
Okay. So in regards to information, first of all, the beauty about the offshore stocks, and I'd say beauty because in comparison to most local markets, you don't get information very easily, mostly unless you're really invested in it, so you get it from the broker. That's maybe how you end up getting information. But the beauty of the offshores is you're able to get this information from the internet. So you have resources, say like Bloomberg, Google Finance, Yahoo Finance, that really give you the nitty-gritties about each and every company. Yes, investor.com. So if we're looking, say, at a company like Google, and you want to understand, you know, we might mention a company like Palantir that you're not aware of, and you want to understand, what does Palantir do? If you go to, say, I'll use Google Finance for this example. If you go search it, it's able to actually give you the graph. Since it was listed as an IPO, you're able to see the market cap, which is the size of the company. You're able to even see news in terms of the small things that are happening that might affect it positively or negatively, and the financials. So these resources are very detailed actually. You get a lot of information and help you make a more informed decision on which companies to buy, sometimes even which companies to liquidate if you had already bought. So I think I've answered the full question.
Yes, you have, because the resources are very, very important, because it's that information that gives the investor the confidence that yes, I can now get in, I can buy this stock, or I can sell this stock. Yes. There are chances you might get it wrong, but more often than not, if you use the information which is readily available, I believe you make a much more informed decision.
Yes.
Does the organization, let's say, have, I don't know how to put it, have a way of buying and selling for someone?
Okay, so how the organization or the company is licensed here in Kenya, it's licensed as a non-dealing broker. So as a non-dealing, we don't have the rights to buy and sell for someone. So what we normally do, because most of the guys we get are beginners, so we actually have consultants who actually help, in the executions with the clients. But from a point of when you come to scope markets, what we do is sit down, we look at these companies together. You actually, by the time you're leaving that space, you already have the information and you're well aware of what you can buy in the markets. So we don't execute it for you. You do the execution. We show you how to do it. Like, even if you're a bit far away and you can't come maybe to the office, we can have a Zoom session where I can guide you through on how to operate the platform, what to do, how to buy. So we do the nitty-gritties on how to do everything on the system. So you're not doing it ideally again by yourself. Yeah.
Before we take the break, how safe is people's money in this platform?
So, first of all, as a Kenyan, I'll just use as a Kenyan because the company is regulated here in Kenya. When you deposit your money with Scoop Markets, it goes to segregated bank accounts. That is a security feature by the CME. It's like a compulsory thing. So in a way that even if Scoop Market goes bust, the CME has protected you through the segregated, capital market authorities.
That's Kenya government.
Exactly,
Okay,
exactly.
okay.
And again, when you're investing in offshore stocks, you realize you're actually buying into companies. So you're actually a shareholder of this particular company.
You get dividends.
Exactly. And you do get dividends, actually.
Yeah.
So again, you see the security in it is the fact that you're actually in possession of these particular stocks. So there's no way you can, like, your money can even get lost because you're actually in possession of physical assets. Yes.
Okay. So with that, we're going to take a short break. And when we come back, please send those questions, and Leah will actually address each one of these questions. So God bless you. Let's meet in 2 minutes.
Okay, asante. Nilikisajili kitabu ambacho kinaitwa 7 Keys to Success, ama kuna kanuni funguo 7 if you like it, ambazo zitakuletea ushindi na kufaulu maishani. Wote, wewe na mimi, tunataka kufaulu, lakini pia kuna njia ya kufaulu. Ukisoma hiki kitabu ambacho nilikiandika kwa kufanya utafiti, kwa maombi mengi, kuangalia neno la Mungu, I have no doubt ya kwamba hiki kitabu kitabadilisha maisha yako. Nilikuwa naongea na mchungaji rafiki yangu akaniambia, nilisoma hicho kitabu, sasa ninafundisha watu wangu kupitia ujuzi, maarifa, hekima ambayo nilipata kwa hiki kitabu. Kwa hivyo unaweza pia nunulia watu wengine, na akaniambia alinunulia hata viongozi wake, na wamekuwa wakisoma, wakaweka kwa library yao wanasoma. Hiki kitabu, sina mashaka, nina uhakika kitabadilisha maisha yako na utabarikiwa. Tuma message ama upige simu kwa hiyo namba, na naweza kuwasiliana na wewe na utapata hiki kitabu, utatumiwa, usome na ubariki pia watu wengine. Asante. Mungu akubariki unaposoma 7 Keys to Success, and you will succeed. Thank you.
Hello there, my name is Enoch. Taking care of your health should be a top priority. Looking at the various engagements that we have today, it is so easy to forget about our health, mental well-being. That is why we introduce to you the Healthier Talk Show, a brand new show that is going to address matters concerning your health, nutrition, stress management, mental health, name it. We bring to you a wide range of experts who are going to be touching pertinent issues concerning our health. Tune in every Tuesday at 10 a.m. live on Faith Today TV.
Welcome once again to Kingdom Business Network. This is our second part on the discussion about investing offshore and the ETFs. And Leah has been taking us through that discussion. And I believe that if you want to diversify your investment portfolio, this is one of the ways to go. If you want to hedge against the Kenya shilling, this is the way to go, because then you'll be buying into dollar-denominated accounts and investment accounts, and that helps you a lot, especially when there's issues with the Kenya shillings. And I would want to ask Victoriana, what questions do you have to Leah?
Yes. So in the previous session, you've talked about how easy it is to get into the stock market offshore, and the ease of buying and all that, the transactions within the offshore space. And you've also talked about the benefit of the dollar appreciating and how you can benefit from that when you're investing offshore.
Yes.
Which leads me to also ask, are there other benefits that investors can get from investing offshore?
Yes, definitely. So the other benefits will include the capital gain. So capital gain in very simple terms just means you buy a stock, say, at $100. Over time, like Francis did, Tesla appreciated. So from 100, say, to 200. So that means you've made your 100% ROI, return on investment. So there's the capital gain, there are dividends also. So even as you're investing in these companies, it's good as an investor, you have to be keen to know whether the company you're investing in offers dividends. Not all actually do, especially some in the tech space don't offer dividends. So it's good for you to be keen to see which ones offer dividends for you to be able to invest if you're more of a dividend type of investor. Then of course now there's the diversification that we've been talking about. Yeah, those are the three main ones in addition to what we talked about before.
Okay.
Yeah.
And so you've talked about getting information on whether these companies offer dividends, and this makes me wonder, are there maybe other factors that investors should be aware of, or maybe hidden charges and hidden costs that investors should be aware of even as they get into investing in the offshore space?
So first, maybe to mention in regards to charges, the charges that you get are from, say, the brokerage firm itself. So for example, with Scoop Markets, there are three main charges for an investor, which is usually the broker fee, the custodial fee, because when you buy these stocks, they are kept under a custodian, and the VAT. So those are the three main charges. And then when it comes to dividends, from, say, if you're investing in US stocks, the dividends themselves are taxed in the US. So they usually have a 30% withholding tax policy. So as at the time you're getting your dividends, that is usually done. So when you get your profits and your dividends, minus the charges we've mentioned, the rest is usually yours, and it's quite transparent. So even when you do some calculations, just to confirm whether what we've discussed is what you're charged, you'll get that exact same amount. Yeah.
Okay. So you've taken us through the benefits, which I'm sure most of the viewers are excited about.
Yeah.
And I know even with the benefits, there's also downsides or the risks associated with investing offshore.
Yes.
Maybe you can just take us through some of the risk factors for offshore stocks and ETFs.
Okay.
Yeah.
So for sure, in any investment you do, it's always going to be risky. But first of all, the beauty about investing in stocks are considered low risk assets. That is a plus. And then when it comes to risk, of course, you will sometimes buy a stock and it will eventually maybe have a drawdown. Just using maybe the COVID period in 2020, anyone who bought, say, airline stocks or some of the industries that were affected negatively, they really went through a huge drawdown. Some companies even went as low as 80%. But again, if you still look at the same period, there are companies that benefited from the same. So say pharmaceuticals and maybe tech companies, that's actually when they started booming. So if you look at the risks, so you need to be really informed. Like there's risk, but there are countermeasures that you can put in place. So you see, like during COVID, you'd maybe exit some of the companies that were affected, jump into ones that were benefiting. But at the same time, you see, after COVID was maybe winding down, all these companies actually went back. So that will take you back to the buying low. So you'd actually maybe benefit more if you liquidated, then bought them at their lowest. So risk is always there, because you know sometimes even with these companies, even let's use Tesla. Sometimes Tesla is very much affiliated with Elon Musk. So sometimes when he does something, it can affect the way the share price is working.
Yeah.
So that's why you really need to get informed. News like there's so much news on the media, and especially on the offshore resources that will always keep you updated. Like just as an example, the GameStop saga. So that was it was considered a David Goliath situation because retail traders were able to outsmart hedge funds and bigger traders like the money makers and all. So at least as long as you're updated on such, it will help cushion the risk. So you're always more of an informed trader. But other than the fact that maybe a stock might drop, I don't really see any other a lot of like risk associated. So, and if it happens, you bought a stock and it dropped, as long as you had done some good analysis prior to buying, there are drawdowns are part of it. So they do dip. Sometimes you might have to be a bit patient until the stock is able to maybe go back up again.
Yeah.
Yeah.
And
Okay, let's go on.
you've talked about something, say like the COVID period, for example, and which has made me to just think of how there are different factors that affect investing offshore in comparison to local markets. And yes, the COVID-19 affected both the local markets and offshore markets, but maybe you can just expound on other factors that affect offshore markets, ETFs, in comparison to local markets.
Okay, so other factors can include the geopolitical situations and even whatever is happening in these countries, like individual countries. So you see in the case of, say, the United States, we just got Trump back. So there's a way Trump is actually a market indicator by himself. There's how people reacted. The moment he actually got back to that seat, there's a way investors reacted to the markets. He's actually considered good for the economy. So you can imagine a lot more investors invested, say, in the US markets. So it's always about the geopolitical events and the market trends again. So you see, like right now, I was saying we're in a tech bubble. So it's good to be up, just keeping up with the trends, because the trends are usually what guide you to know which exact industries or which space to invest in. So mostly those factors. Yeah.
Okay.
Now, a question on ease of putting money into the platform and withdrawing the money in the platform. And when it comes to dividends, are they paid, for example, on your M-Pesa?
So, okay. So ease of depositing and withdrawal.
Yes.
So when you're depositing, first of all, as long as you're depositing an amount within the M-Pesa range, you have M-Pesa as a deposit method. So as long as you're depositing as per the M-Pesa limit, the deposit is instant. It's like, you see the way you'd send me money, for example, it's an instant transaction. So when you're funding on the platform, it's that instant. You put in what you want to fund. In fact, you get a prompt. Put in your PIN, the money reflects. You buy what you're buying. Liquidation, again, I said, is instant. And then when you're doing withdrawal, it's again as instant as a normal M-Pesa transaction. Then when you're getting your dividends on the platform itself, where you've deposited your funds, you normally see it as a balance. So the dividends are automatically added to the balance. So again, that's now when you withdraw. So they are not automatically done to your M-Pesa. They'll go to the platform inside your balance. Then you just do the M-Pesa withdrawal.
Okay.
Yes.
Still on that question, a viewer is asking, morning team, just wondering, am I supposed to be there all through to monitor exchange rates? I think somebody has put, let's say, 100,000 Kenya shillings, the exchange rate. Are they supposed to monitor that, or how do you go about exchange rates? Because you have to convert the Kenya shilling into dollars, isn't it?
Yes. So not really, because you see, you've deposited 100,000. At some point, the kind of capital gains you're anticipating from these markets, you can't even compare with the exchange rates. Because ideally, the moment you've invested, say, even if, say, our Kenyan currency will start appreciating. But you see, the moment you're investing in this space, the ROI is way high in comparison to the small foreign exchange gaps we normally have. So that shouldn't even worry you, because by the time maybe you're withdrawing, the capital gain, the dividends you've gotten, you won't, maybe the foreign exchange thing might not really be a big deal. Yeah.
So if I get what you're saying, if I put 100,000 Kenya shillings today, you'll give me the prevailing exchange rate today.
Yes.
So then you'll convert my 100,000 shillings into dollars.
Yes.
Today.
Yes.
And now in the system, I have, let's say, X number of dollars. Now, once it's in dollars and the Kenya shillings appreciate or depreciates, that my dollars still remain the same.
No. So you see, for example, say you want it to read in the account as $1,000. Just using that, so because the rate is 130. So it means you need to have an extra 30 so that it can read as 1,000.
Yeah.
So then you go and do whatever you're doing in the market. On the day of the withdrawal, it will use the current exchange
At
rate.
the time you're withdrawing.
Yes. So if today it was 130, next maybe you're withdrawing in a month and it's 140 as an example,
So
you'll use 140.
So
you
you
use
back
the
as
current.
140.
Yes, you
so
use the current.
there's actually a gain.
Yes, exactly.
So it's also something very important in terms of timing of when to get in.
Yes, when to get in and when to get out.
Like when the Kenya shilling is weak, you
Yes,
get more
that's the
dollars.
best time to get
you
in.
can get in.
Exactly.
When the Kenya shilling is strong, okay.
Vice versa.
When the Kenya shilling is strong,
Yes.
you get in.
Exactly.
Okay.
Yes.
Okay. Now, enjoying the show. How can I avoid the risk of investing in foreign stocks? How can I avoid? I know you've talked about the risk, but how can this person avoid?
Actually, first of all, you can't really say you will avoid risk. Risk will always be there, to be honest, but it's about limiting your risk. So the most important thing for that is information. You just need to make informed decisions. Like, don't just buy Tesla because he bought Tesla. When you're buying Tesla, make sure you understand, why am I buying Tesla? Why am I buying Google? Like, just make sure you don't buy stuff just because other people are buying. Some people use that as a strategy though, because there are investors who are considered big investors like Warren Buffett, Nancy Pelosi. There are people who actually buy because they buy. It's a strategy. I'm not saying it's a bad one, because these are considered, people who have a lot of experience in the markets. But even when you're doing something, you just don't go and buy a Mazda or a BMW because someone else bought. You need to understand why. What is the benefit of buying this thing to you? So the information is the best way to limit your risk. Yeah.
Joki is asking something I think you've answered. They say, how do dividends from offshore stocks work? Maybe you can just recap a bit of it.
So with dividends, again, as I mentioned, when you're buying into certain companies, they're actually companies that are called dividend, they're referred to as dividend stocks, because they're really good for dividends. And we have companies called capital gain stocks. So sometimes you might buy a company, say like Palantir, which really did well in 2024, like 300%. But in 2024, it didn't give a dividend. So as you're buying a company, actually when you just check on Google Finance, when you search it, it usually indicates whether it has a dividend yield. So if it does have, when they're releasing the dividends, of course they usually have the dividend dates, and you're aware even before they are released. So immediately the dividend is released, it's usually credited to your balance automatically.
Okay.
Yeah.
You've talked about dividend stocks. What other stocks are there? Might be growth stocks, etc. And how do they operate, and why should somebody choose one over the other?
So dividend stocks, actually you'll find that a lot of dividend stocks are what we refer to as value stocks. Growth stocks are mostly like the tech stocks. Most growth stocks, sometimes, not all, actually some growth stocks are the ones that don't give dividends. But now when it comes to dividends, you can focus more on these value stocks. And it's actually companies like what you mentioned, Coca-Cola, and many companies that from, old companies, and most of them are usually very cheap. Their PE ratio is also a bit low, but they usually now give out a lot of dividends, and they have a lot of stability in the markets in the long run. So it's like most old companies, and they can be energy companies, the likes of Akina Total, old Colgate, the old companies that we know about, that don't move much in terms of price, but are very solid and make a profit annually. Yeah.
You've talked about PE ratio. Maybe you can just mention a bit about what it is and how it matters in the decisions that you make in terms of what stocks to buy.
Okay. So just to really make it simple for a new investor, with the PE ratio, you know, when you look at a company sometimes, you can look at it with a bit of information. You get to understand overvalued companies and undervalued companies. Also, there are times when you look at a company and the way it's giving out dividends. So the PE ratio is about that balance. So sometimes it's good for you to look at these companies in terms of, are they overvalued or are they undervalued? So that you can be able to understand, even when you're investing, the companies that have a kind of low PE ratio are the ones that actually give out a dividend. The ones with a bit of a high PE ratio, mostly you realize these are growth stocks, these tech companies that we are talking about, and they are really good for capital gain rather than the dividends. So with that, it's just a matter of looking. I think at the end of the day, everyone wants to make money. So if you look at dividend stocks for the last 5 years, you can't compare with these capital gain stocks. In as much as they have that high PE ratio, they also have a very high growth rate. Yeah, so it's just a matter of what you want, really.
Okay.
Yeah.
Brian is asking, is in Thika, saying, is investing in these stocks safe or is it like gambling?
So it's actually really safe. In fact, you can't even compare this with gambling at any angle. And the reason is, first of all, you're investing in the biggest companies globally. These are the most solid. In fact, you see, like, I don't want to mention maybe specific companies, but if you look at our history in Kenya, we have companies that were there and they're not there at the moment, and people had invested in them. But if you look at the offshore space and the kind of market caps, this market caps is the size of these companies. It's not a company that will be there today and not there tomorrow. Of course, they might have a lot of challenges in between, but like based on how they are structured, these are things they even go through and they're able to weather the storm. So these are very solid. In fact, they're some of the most solid investments you can do. Yeah.
So it's not like gambling.
It is not at all.
Okay, okay. Jennifer, we hear you loud and clear. He's saying, Jennifer here, like how much money do I realistically need to start with?
So in terms of money, this is really guided by the stock you're interested in. So if a stock, say if an Apple share is $200 and you want to buy Apple, that is what guides you. The beauty again, when you're investing through, say, a company like Scope Markets, we offer fractional stocks. So fractional means if again you can't afford to buy that Apple share at $200, you can buy a half of an Apple share, say 0.5, which will be $100, or you can even buy 0.1. So you can be able to buy fractional stocks as low as 0.01 of a stock. So what really guides you is the cost of that actual stock. And then if you're not able to buy it as a full stock, you're able to buy it as fractions. Yeah.
Okay. Victoriana, what's your take about all these and what questions do you have?
This a lot of vital information, I feel, which leads me now to maybe asking, in investing in offshore stocks, who is it best suited for in terms of the investment horizon or even the risk profiles and maybe other factors?
So I would say anyone really, any individual who is interested in the investment space, as long as you're 18 years and above and you can be able to make a solid decision in investment, it is actually for anyone and at any level in life. You know, kitambo, it used to be looked at, maybe these investments are for the older generation or when you're retiring, that's when you get into the space. So how it's structured nowadays, because it's really going down to the smallest of retail investors. You see, that's why there's even the fractional stocks.
Yeah.
So it means with even $50, $20, that's like 2,000 bob Kenyan shillings, 2,000 and something if you put in the rate. You can be able to start at whatever level with whatever amount of money. So it is available for any kind of investor. Yeah.
Okay.
If you are to give our viewer practical tips on how to go about investing offshore and ETFs, what would the key ones be?
In terms of the companies or?
I want to invest. So summarize for me, what are the key things I need to do and what are the things I need to look at?
Okay. The most important thing is, of course, having money. So you need to, so how we normally go it, I'll just take it from an individual perspective. So you've come and you're ready to invest. I think the most important thing is how much are you willing to invest, because that is what also guides me to know what exactly maybe we can explore. Because if you look at, say, an ETF, the ETFs, if you look at the price range, just as an example for the big ETFs, they range, say, from around $500. So you see, depending on, if you came with $200, we'd not definitely look at an ETF. So we look at maybe some stocks that fall within that range. But just to give it very simply, even if you're not coming to me, right now the best space to look at is the tech space, the tech AI space, the green energy space, the biotech space. So those are the current emerging markets. And that might be the case here until 2030 or even after that. So at least now with an idea of the kind of space you look at, it's more about how much money you have so that you can now be able to break it down into the specific companies you can be able to afford. Yeah.
Okay. What's your take on that?
Maybe a question. Are there some mistakes that investors make as they're getting into investing in the offshore stocks and ETFs that can be avoided?
Yes, I think one of the biggest mistake is where there's usually like a boom in something. So whenever there's a boom or something is blowing out there, that is when it gets to everyone. That's when you start hearing maybe companies like Nvidia, Palantir, and even you saw it maybe with Trump coin, just to deviate a little bit. There was the coin that was released when Trump got in, and a lot of people ended up buying when it was at its peak, and then it did a bit of a drawdown. So a lot of people tend to buy assets when they're at their peak, because that is actually when you hear about something. You know, when something is blowing up, that is when you get the information. Oh, there's this thing going on. Even with cryptos, that's why people buy when they're quite high and then they pull back. So the idea is, some of the common mistakes is people buying when they're really high. So like when they're at their peak. So we usually say you have to wait for discounted pricing. So you have to wait for them to at least do the corrections and stuff so that you can be able to buy. So that's one of the biggest challenge. The other one is just the way we're saying people just buying things because they've had others doing them without doing proper, without doing proper research and analysis for themselves. And also people that don't like keeping themselves updated with news. So keeping yourself, like, news is quite essential when it comes to the space. We call it fundamental analysis. So keeping up with the fundamentals is also quite essential. Some people don't, and it ends up affecting their positions. So I think those are like the three main mistakes people do. But of course, you see, they have a way around them. As long as you're able to work around that properly, it's very easy to avoid the mistakes.
Okay.
Thank you very much. So we want to conclude the show today, and I want to ask Victoriana for some parting shots. Maybe we can tell the viewer what to expect in terms of these investments and your parting shots.
Okay. Thank you, Dr. Mungai, and thank you, Leah, for those insightful points. I believe that our viewers are now better informed, and you're going to make better decisions regarding your investments. And I hope from here you're going to take up the challenge to invest offshore, because you've had all the benefits and how easy it is to buy and to trade offshore. So keep it locked on KBN. Remember to share this with your friend so that we can all have our money working for us. And I do hope and believe that you will continue to tune in even as we continue to invest globally. Thank you.
Thank you very much, Victoriana. Let's turn to Leah. You can tell us about your company, give us some parting shots. And if you're free, you can give people your contacts if somebody out there wants to continue this discussion with you on one-on-one. The platform is yours.
Okay, so thank you so much for having me. I think it was a very engaging session. Thank you for the questions that came in. So as you're winding up, I hope everyone has understood on the offshore space, but I know there are so many questions, follow-up questions. So I'm going to give my number. Maybe I can read it out, but I'll leave the details. I read it out.
You can read it out.
0708041644. And
repeat it again.
0708041644. So if you have any follow-up questions, anything you'd want to know further about that, you can easily be able to reach out. For the company, Scope Markets, it's based in Westlands. The building is called Westside Towers. We are located on the 4th floor. So you can walk in, you can look for me when you come there, or you can get someone else who can be able to assist you. So it's a very open and friendly space. So when you come there, we'll be able to give you the information, we'll be able to set you up with an account, but you don't necessarily need to come to the office. These are things we're able to do online. So the company will be able to offer you all these packets. So the moment you open, you get the platform. So we don't charge anything for this particular process. In fact, there's no cost when it comes to account opening, the platform, or all that. The only the point you'll interact with charges is what we talked about when you're buying the actual stocks. Yeah, I think that's pretty much it.
So thank you very much, Leah. This has been an eye-opener for many of us. Personally, there's something I've learned that I didn't know, and I believe the viewer has gotten another way to invest his or her money. You might not have the money today, but this information will help you, especially when you get loaded, because we've been discussing a lot about how you can invest. Last week, we talked about investing in the Nairobi Stock Exchange. Before that, we talked about mutual funds. And these are ways in which you can be able to grow your money step by step. And it will reach a place whereby you have done one investment option successfully, you move to another one, you start to diversify, and you reach a place whereby now you want to go global and you want to have your money not in Kenya shillings but in dollars. And with that, I want to say God bless you very much. And thank you very much once again for staying tuned to Kingdom Business Network. This is a network whereby we want to help you as a business person, as an entrepreneur, as somebody who wants to invest, as somebody who wants to grow financially. We want to give you practical tips on how to do it. So with that, God bless you very much. Until next time, shalom.